We're now going to move into the next session. So in front of you we have Trevor Cohen, who's the EGM Utilities, Pat Burke, EGM Asset Services, and Andrew Foster, EGM Defence Systems. Much the same situation. We'll hear a presentation from each of them, and then I think we'll have some time for Q&A with these three guys after that. So I will now hand over to Trevor.
Thanks, Michael. Good morning, all. Just the photograph you see up here really at the end of the day is what we do in utilities. We partner with our customers to ensure that they maintain the essential services to their customers in the power and gas distribution, water and telco sector. And nothing was more important than what we saw in the last 2020 in the COVID, height of COVID, where we had more of the workforce working at home. And we really worked tirelessly with our customers to ensure that their customers maintained all the access to those essential services during that pandemic, height of the pandemic. My name's Trevor Cohen, so I'm the EGM of utilities, and I came across from Tenix when Downer bought Tenix, and I've been leading the utilities journey for Downer since that acquisition. I'll just go back here. What I hope to do after this presentation is to be able to articulate that we're in the essential markets that matter. We've got a really good, strong market share, and we've got a balanced portfolio in those sectors, both present and in the future, as we go through the presentation with a lot of the contract wins that we've actually been successful with over the last 18 months to 2 years. And just on that, and I know we get a lot of questions, is really, we had this amazing NBN rollout, and we were really one of the major delivery partners for NBN in that national rollout for the NBN network. And where does that leave us now after coming off that? And you can see there that in a day that we're in that water, that telco, new energy, and that power and gas sector. And we've been able to establish ourselves to have that balanced portfolio across those sectors after the major rollout of the NBN. And we've won really good revenue in going on with NBN with their unified network. So we've built some of the network. Now we're in WA, South Australia and Northern Territory, and we're maintaining that network for NBN for the long-term contract. We won our Telstra Field Services optimisation. We renewed our AusNet contract, which I'll talk about a little bit later. We were successful with Sydney Water with our partners in Confluence and Logan and Urban Utilities. And it goes on with the success that we've had to be able to create this balanced portfolio in the utility sector. And our work in hand, I was going through the maths the other day, and it's uncanny that our current portfolio or our current revenue and our future work in hand with the options that we have in the contract actually creates exactly the same balanced portfolio. This is our national footprint, and you can see that we're all around Australia with the sectors that we work in. Predominantly in Northern Territory, we're in that telco sector for NBN with our Unify Networks contract that we won. So we look after the networks for NBN in South Australia, WA, the Northern Territory. We won those territories exclusively. On the East Coast, those territories were shared to our competitors, 2 and 3 of our competitors, but NBN had faith in us in looking after that geographical region as Downer is the only provider in that region. We have more than 3,000 Downer employees plus our delivery partners that get up every day to work around this footprint to make sure those essential services are available for our customers day in, day out. And you think about the safety journey that we've been on in utilities. When Downer bought Tenix, we had a TRIFR that was over 4, and we've been able to get our TRIFR in that under 2 in that journey. So we've adopted the Downer strategies, the Downer processes, the Downer systems, the leadership that come from being part of the Downer fold into that safety journey. We've been able to bring our TRIFR down, which is really a fantastic story for us. the power networks, you can see there that there's a huge market in power networks, but only a small portion of that market is outsourced. And we've got a really strong position in that outsourced market. And our jewel in the crown there is our renewal of our 20-year relationship with AusNet that we've just renewed with a further potential for another 10 years of contracting with AusNet, which I'll talk about a little bit further. And the same with our gas networks. More of that gas network is outsourced, and we've got a really dominant market position in that gas network. Maybe 3.5 years ago, we only had really one main gas customer. Now we actually have 4 gas customers, so we've expanded our customers across that gas network quite considerably. And you can see there in our customer base, we work for government, or we work for government assets that are either leased or have been on-sold in a regulated market. Further to what Grant was saying at the end of the day, they're good payers. You can have long-term relationships. We sort of align ourselves. We keep ourselves attuned to what their drivers are, and so if they're successful and we understand what their drivers, because in this world that we live in today, change is the most constant thing. Their drivers are always changing, and we stay attuned to those drivers, and we keep helping them to be successful, because ultimately that is what makes us successful. We are positioned really well in the power distribution space. Sorry? Power distribution. So you look at AusNet is our flagship jewel of the crown, if you like, at the end of the day, and we've evolved that over 20 years, and they put their trust and faith in us to look after the total distribution network. Now, we've got a lot of other distribution networks in Australia. We saw the sale in New South Wales with Ausgrid and Endeavour, but their key focus in that initial term was more around about how to actually understand the asset that they've actually leased. And the cost out drivers was more around the capital delivery, the white collar mix with the blue collar mix, rather than what our sweet spot is, which is to help them in optimising and being more productive in the field services. But we're well positioned now because we've got really good connections and relationships with Energy Australia. We do asset inspections, we do pole staking, we do customer connections in Queensland. We've recently tendered a lines panel with Ausgrid to help them with some of their line work, and we look like we'll hopefully will be successful there, which will actually then give us a greater presence in Ausgrid in New South Wales. We also do meter reading for Ausgrid. And in WA, we do street lighting for Western Power, we do asset inspections for Western Power, and we do pole staking for Western Power. And for those who've been around the streets and see pole staking, you drive a couple of nails down the side of the pole, and actually the pole has the stability and strength without worrying about what's under the ground. WA have actually decided they don't want to have those stakes, they don't want to drill the poles, they want to have a bandit solution, and we've been working with Western Power over the last 12 months, and we've actually got our own IP within Downer now to come up with that bandit solution, and we're hoping to hit the ground running in the next couple of months with that, once we get through all the engineering approvals, and we're just about on our last legs with that. And Western Power has something more than 3,000 poles that they've actually got to do something with, yeah? So we're bringing that IP into that. But what the key thing here is that today we're creating those relationships with those energy or distribution customers, so when they see that they need to move into that field services space and help them optimise and be more productive in delivering that field services, we can take what we've actually developed over the last 20 years in AusNet and help them in that evolution. And there's a lot of political agenda and all those things that need to be resolved, industrial solutions and so forth. But we are well positioned to help them as they want to go on that journey. And in AusNet, we've invested into what we call a field services mobility, and we've been working with that customer for the last, and Grant would probably say we've been working a little bit too long, but anyway, we've been working with that customer for the last 12, 18 months to actually develop that field services mobility solution, and we're about to launch that. and it's actually an end-to-end solution. The work order will come into our tablets, we'll process the work order, we'll close the work order out, we'll have the artifact of the work order being completed, we'll feed that back into AusNet's SAP system, we'll automatically invoice us, and actually it's an end-to-end to their ERP. And once we've got that out, again, we're positioning ourselves even further to be that partner of choice for these other distribution customers when they choose to evolve into that field services solution. Water. So water has had significant growth, and look at Sydney Water. They've got a need to spend probably $1 billion or more a year over the next 10 years, because you're talking about assets that really have had not the investment that they needed over the last 5 to 10 years. You've got population growth in pockets. You've got environmental requirements that need to be met. So they have to keep on upgrading and investing into their assets. Across water, we've focused more about the major water authorities. So we're working for urban utilities, we're working for Sydney Water, we're working for Melbourne Water, Yarra Valley Water, South East Water, City West Water. So we're really focused on those major water authorities because they have long-term programs of works, and some of that success that I talked about in the last 18 months to 2 years has actually set us up that we have such a significant market share with our partners, because some of these opportunities, you take Confluence, which is for Sydney Water, it's a 10-year contract, and we're looking after the whole northern region for Sydney Water in upgrading their plants, upgrading their HV, upgrading their networks, whether it be stormwater, wastewater, potable water. So with our partners, we've got a 10-year contract there with Sydney Water. The minor water authorities, more focused and engage the Tier 2 and Tier 3 contractors. So it's not really our competitive space. And the same with the local councils. I mean, local councils really are about maintaining their existing assets, but also feeding work into the local communities. So our biggest revenue there, whilst we've got a reasonable good share, that really comes through Logan. And Logan Council is one of the fastest growing councils in Australia with their corridor and their growth rate. And we've been with Logan for the last 10 years, and we've just renewed that for potentially for another 10 years. And it's over $100 million a year that we do with Logan, yeah? Major capital works in the water sector is significant. It's just huge, and it's around dams, treatment plants, whether it be water or wastewater, and pipelines. We have a unique IP in wastewater that we've developed over the years in our MBR, membrane bioreactor solution. And so we are really selective in the projects that we bid there, because this is really the D&C space. Any process plants, they a D&C, whether it be water, coal preps, iron ore, process plants at the end of the day from a D&C, the risk bills go off and off and off, yeah? But what we do is we work with customers that actually are prepared to have mature conversations in relation to risk. We've done some wastewater treatment plants for local councils in the past, and the risk profile just doesn't suit us going forward. So we focus mainly around the major water authorities that are mature enough to have those risk discussions. And we're currently building one for Sydney Water, and we're in if you like, a sole ECI with our partner we're tendering one for another one for Sydney Water. But again, you can have those conversations, mature conversations with Sydney Water, where they really can manage the risk. They're happy to take the risk, and where we can see a way through managing the risk, and then we take on the risk that we can manage. And then again, that's where our water customers are around Australia, which I've already talked to. Telco. So you can see there that there's about a $1.8 billion opportunity in telco now. Post the NBN rollout, so I said we've won ODM, which is on-demand module for NBN. So people that are looking for high bandwidth, fast speed, we work with NBN to connect those customers. We got the Unify Networks maintenance contract in those WA, South Australia and Northern Territory. We recently won our Telstra optimisation, field optimisation project, so we were successful with that. A lot of that Telstra contract really at the end of the day was consolidating different contracts that we were already doing with Telstra. So whilst it actually gave us tenure, it didn't really actually give us increased offerings with Telstra, but it was good to get that tenure. And we're currently in a process with NBN. So people would have seen that NBN announced that they've got nearly $3 billion to go and improve the NBN network. So what they're doing today, where fibre went to the node, and then from the node to the premise was in copper, the old Telstra copper network. So they're now extending in areas that node, getting rid of the copper and extending the fibre to a pit at the premise. And then people that want to then access that fibre at the pit, they will then connect, and as they roll that out, you can get that fibre straight to your home. And we're in a tender process with NBN now. I mean, we got through the first round. One person dropped out, so we made it through the first round. We now submitted our second round, and we're hopefully confident with our relationship with NBN that we'll continue and be successful. New energy is an interesting market for us. We've recently won a contract with AGL. So AGL is working with their customers. So this is a nationwide contract that we won. They're working with their customers to put solar and battery, and they're funding that and coming up with a commercial arrangement with the customer. What that does then, it gives AGL long tenure as a retailer for that customer. So we've got that national-wide contract with AGL, which is just really starting to ramp up. We work with Queensland Education Department in putting solar and energy solutions on schools. We're out there building solar and battery solutions for water authorities. We're currently working for Hunter Water. We're doing one for Logan Water. I should have mentioned that one of our IPs in water was treatment of biosolids. And we're partnering with Logan to be the first biosolids plant to be built in Australia, where you take the biosolids, the waste, if you like, it goes through a dryer, it gets burnt in a gasification process. I'm really simplifying it, but it gets burnt in a gasification process, and you get this char at the end that can go into land for fertiliser. And it'll be the first process. We've gone through our trials, and once we finish, hopefully we'll be finished middle of next year. That'll be the first plant in Australia. And again, this is our footprint in Telco and new energy. There's some icons missing off there. Oh no, sorry, that you can see there, that's how it's been depicted here. You can see there that we're in all states for AGL and Origin, and nationally for that Telco world, and just in Energy Australia. So another offering that we have in Downer, we're accredited smart meter provider. So we can install the smart meter in people's homes. We have our partner with the data management, and that actually with the power of choice. I mean, Victoria had a mandatory, they went down the smart meter process, but it was on a radio frequency network, whereas these ones here are on a telco comms network. So we've recently done a trial with Origin, and we're in the process of doing a trial with Energy Australia to build that business up in that power of choice and smart meters. It's a really slow burn, but you've got to be in it to be part of that slow burn. And that's me. Thank you.
Good morning, everyone. So my name is Pat Burke. So I'm the Executive General Manager of the Asset Services Business Unit. So I just thought I'd give you a quick rundown of what we do, what our markets look like, and perhaps talk about what a lot of people have alluded to today, which is around the decarbonisation and hydrogen space. So Asset Services, so we're basically the industrial maintenance, shutdown, turnaround capital works program specialists, I guess, in Downer's portfolio. So most of our customers are really in the heavy industrial space, power generation, oil and gas. And you'll see there that we have two lines of business, or two sub-business units. So the first one's power and energy. So in power and energy is a combination of our oil and gas portfolio and our power generation portfolio. So basically in oil and gas, that's a business we've been in for some time, and pre-COVID we were probably number 2 in terms of LNG and CSG maintenance. I think we're either 2 or 3 now in that market, but a lot of our exposure has really been in the coal seam gas industry. And in coal seam gas, we do field development services and maintenance and installations. Is what we're really, I guess, they were impacted by the oil and gas price, obviously, but we're really starting to see that market come back in FY20 next year, calendar 22. If you look across what we do there, we had a number of maintenance contracts on LNG plants as well as through CSG, and it's been a real opportunity for us to build some strong relationships with our LNG customers, especially with the new LNG contracts that are coming out next year. So on the power generation space, so most of the work we do there is maintenance and shutdowns. It's an interesting space to be in at the moment for obvious reasons, but we do provide a number of specialist services there, and specialist services are really important because from a margin perspective, often when you go into a customer, the margin you start with, you go in with at the start, is the bar, and it's very hard to increase your margins going forward. So when you go in with specialist services, you tend to be able to get a higher margin than what you would otherwise be able to do. So that's an important piece of that power generation business, is that we have got some strong specialist capability in turbine maintenance, rotating equipment, and boilers as well. On the industrial and marine front, so again, it's electrical and mechanical maintenance across the board. It's planning, scheduling, a lot of asset management type activity. Our key customers there, it's again tier 1. So I should have mentioned that in the power and energy space, our customers are really around, the Chevrons, the AGLs, the CS Energies, the Stanwells, etc. So they're all tier 1s. We're very selective on the customer base that we have. And then when you go back into the industrial marine space, it's the heavy industrial players. It's the BHPs, it's the Blue Scopes, it's the QALs, it's the Rio Tintos, it's those sort of customers. So it's pretty solid, all tier 1. And if you look at contract type across the board, I mean, you've heard a few times people talk about risk exposure and so on today, and it's a really important piece for us in terms of being very selective with the customers we deal with, but also the contract types that we have. So most of our contracts are long-term. They're, like I said, with tier 1 customers. They're cost reimbursable. So about 90% of our work in the asset services space is cost reimbursable, with profit based with either cost plus with a fixed profit, or profit is based on KPIs, so it's performance based, and it's within our control. The tagline, relationships creating success, is a really important one for us. So we do tend to develop quite deep relationships with our customers. I think Kamal mentioned before mentioned the word intimacy, and as what those strong relationships do, it enables us to obviously understand our customers' needs and wants. So it helps us on the development and the work winning space, but it also helps us to lower our risk profile, in that the stronger relationship that you have with your customers, the more likely you are to have some early engagement with them, and be able to sort through any issues that you might have along the way. And a lot of our relationships are alliance based as well, so very much in that relationship mould, if you like. So the markets it is a really interesting place at the moment. It's very fossil fuel exposed, which some people might go, oh geez, that's a problem. But the reality is that's an opportunity for us. When we've got a market like this that's in the degree of change that it's in, To me, that's all upside. It's all about opportunity and moving with as long as we respond to our customers' needs and move with them. So if you look at the oil and gas market, you'll see there that oil and gas is the big brown bubble. We're talking about an $11 billion total outsourced maintenance market, but our business works more than in the maintenance space. It also works in that brownfield capital workspace as well. So you could add another couple of $1 billion to that chart in terms of the scale. But certainly in oil and gas, it's a highly outsourced market. We're about somewhere around that 10% region. And one of the good things about not having that really high market share is we've got a fair bit of growth potential that's coming up. So like I mentioned before, if you look at the next 3 years, the next 3 years coming up with LNG plants, a lot of those long-term contracts are coming to market again in that time frame. So that's something we've really been prepping for. So these are the long-term maintenance contracts on the likes of Chevron, with GLNG, etc., Curtis Island, Impex, etc. So a lot of those, they only come to market every 3 to 5 years, and they're basically coming up in the next few. And field development services had a bit of a hiatus really due to COVID. So a lot of the oil and gas customers actually really pulled their heads in terms of their capital spend and their development spend during that time because gas prices weren't where they needed them to be. But we're really starting to see that market pick up again. We're seeing the tendering activity come through. We've got a very, very strong relationship with both Santos and Origin in that space. And we're really thinking that that calendar 22 year, which is of course the oil and gas companies are working on calendar financial years, we really think that we'll see a lot more upside coming, to probably towards around that February, March, April next year. If you go across to industrial, so like I said before, the industrial piece, it's that heavy manufacturing and mining, etc., and also in ports. In the mining space, importantly, we actually don't do any work anymore in the coal mine maintenance space. So we've completely pulled out of that space over the past year or so. So most of our work really in that space is in iron ore. So we have some significant contracts with BHP in terms of WA iron ore, maintenance contracts at Port Hedland. And we've just been awarded a significant slice of the Olympic Dam SCM21 shutdown, which is coming up in August, which is a really good body of work for us. And importantly, again, those contracts, that particular one is cost plus, but the other ones are cost reimbursable, etc. So it's a really interesting space for us at the moment. The power generation space, so a lot of turmoil happening in the market there, and we actually are number one in that space. So we have quite a good market share. But the interesting piece around that market, of course, is that you'll see there that if you look at power gen, the amount of work that's outsourced is increasing significantly. And I think it's where that's really going is we're going to see more, as they try to variabilise their costs, we're going to see more outsourcing in the maintenance market, general maintenance market with power gen, and also with even into operations and engineering support as well. So the actual pie, whilst it might be a bit counterintuitive, the actual pie that we're playing with power gen we're thinking will increase. So I think, and which sort of brings us into that decarbonisation space, if you like, which is a really interesting topic for us. I'm pretty passionate about it. I don't think it matters whether you're a climate change warrior or a denier. We all know that putting stuff in the air is probably not the right thing to do. And certainly, as I think Marvin Grant mentioned earlier, that business is leading government when it comes to decarbonisation. And we're seeing that every day. So the amount of conversations that we have on the decarbonisation front it's incredible. The amount of time and effort, restructuring, etc., that's going on in this space. And it's important to sort of understand, well, what does decarbonisation actually mean and how do we play in that? So decarbonisation has a lot of different aspects, I guess, but and alternative fuels is only one of them. But decarbonisation industry is also about energy efficiency, and when you've got energy efficiency regarding lots of plant that choose a lot of power, like in steelworks, aluminium refineries, etc., that inevitably means maintaining your equipment better and paying more attention to that. It also means that you have to select different technologies and install those technologies on site, thereby obviously creating opportunities for us. Then if you go into CSG, it's about fugitive emissions. So how do we work with our customers to help them reduce their fugitive emissions in gas fields? A number of our CSG customers that have installed gas engines on their wells, for example, are now changing those out to electric. So this is only 2 or 3 years or 5 years after they've been installed, and they're already looking at some major modifications to their kit to lower their carbon footprint overall. If you look at, I guess, like I said, the change is an opportunity for us, and we've worked really hard over the last 3 years in that hydrogen space. And hydrogen to me is a generational change. It's a really interesting piece. Sorry, I'll just change the slide here. Sorry, so hydrogen, we started working on about 3 years ago, so it's sort of become really popular in the last 6 months or few months. You've seen it in the paper quite a lot, and it seems to be everyone's on board. But we've been working on it for, I think, since about 2018 or 19. And during that time, we've really been honing our skill set, if you like, and looking at where our capabilities could move across the value chain, and also looking at how we engage with our customers and trying to position ourselves as being in almost like an advisory position to our customers. So we've really been trying to get ahead of the game in terms of technology and demonstrating new technology to our customers and helping them through some of the discussions they've been having. So we've been positioning ourselves on the front foot rather than being a contractor, if you like, on the back foot that responds to a tender. So it means that we have changed the nature of the discussions we've been able to have with our customers. If you look at what hydrogen means for society, I think the easiest way to describe it in 5 minutes is that it's really about anywhere where you use diesel in the future, so long distance freight, etc. Some power gen will most likely become hydrogen powered, and everywhere where you use coal at the moment will probably hydrogen will have a part to play. So in that multi-fueled future, if you like, we'll still have battery EVs running around the cities, etc. But trucks, freight trains, seasonal power generation, like coal-fired assets, they'll most likely be hydrogen powered. So that's really where we've been putting our effort in terms of developing solutions that align to those spaces. And you'll also note that a lot of my colleagues here have been talking about decarbonisation and hydrogen as well. And we really have been working really closely together in how we can obviously look at Downer's footprint, but also how we can help our customers longer term as well. So it's a really important space for us. It's really interesting and exciting. We've built some great networks, and we are having some pretty advanced discussions with technology partners. One of those technology partners that we've been with for some time now is Mitsubishi Power, who are one of the most advanced in terms of hydrogen power generation in the world. So we have an exclusive relationship with them in Australia. And we're also dealing with a number of other technology partners overseas at the moment. So we're really trying to get on the front foot from an engineering and advisory perspective and making sure we've got the right technology solutions as our customers move into that space. And you'll see here, as Julie mentioned, we recently joined the Australian Hydrogen Council. Really important around the networking piece, but also important around making sure that we've got the right skill sets for the hydrogen economy going forward, because they are slightly different to what we've currently got. But we're really well on the road to developing those. And like I said, I think we're really well positioned in that space. So that's the asset services business overall. Andrew.
Thanks, Pat. Good morning, everyone. So I'm Andrew Foster. I'm the EGM for Defence Systems in Downer. I've been with Downer for 16 years, and I can tell you that this defence space is a really exciting space, as I'm hopefully going to convince you now. But firstly, I'll just move to the next slide. So firstly, I just want to touch on what's written up there on the first slide, and it's somewhat of a little-known fact that Downer's actually been involved in the defence sector for 80 years. And so we're celebrating our 80-year involvement this year. And I can also tell you that our defence customer doesn't really know that either. And so it's pretty good to be able to go around Canberra, where I spend a lot of my time, telling defence and capability leaders about the great story of Downer being involved in this sector for the last 80 years. And just to sort of touch on that, 3 of the, I guess, originator companies in the form of Evans, Deakin, Walkers Limited, those 2 were quite involved in the construction of Bathurst-class corvettes from 1941 through to the 1970s, both in Brisbane and in Maryborough. And then Clyde Engineering was also involved with aircraft maintenance and building and fabricating munitions locomotives. So quite a rich history in the defence sector. And I guess the theme with defence, when you deal with the defence customer, heritage, Australian capability and being sovereign are the dominant themes that really matters to that client. So it's really good to be able to go around and talk about that. So I thought I would just touch on some of the defence market drivers, and you're probably aware of a few of these. So there's no doubt, and as you interface more deeply with people in Canberra, you begin to realise the depth of this, that our security situation is deteriorating here in the Indo-Pacific region. We're seeing a shift from the Middle East through to the Indo-Pacific region in terms of instability, and the defence people use this term as grey zone warfare. And I'm talking predominantly about intelligence, surveillance, reconnaissance and electronic warfare, ISREW. So that's the other thing I just need to warn you of. Defence is filled with acronyms, so just stop me if I pull one out and I haven't explained it, or ask me at the end. But ISREW is really the grey zone warfare piece at the moment, and it is pretty intense. So we've all seen cyber attacks. That's just the tip of the iceberg. There's a lot of this going on, and there's a lot of investment that's been made by federal government and others to protect ourselves. We've all seen the staggering numbers that Defence has put out in terms of the 2016 and then the 2020 Force Structure Plan and the Defence White Paper. They're talking about spending $575 billion over the next 10 years. And so that equates from the current day 40 to 43 billion growing to $70 billion over the next 10 years to really build capability and operate that capability going forward. Third point down there, establishing self-reliance is a key theme and is very, very important. And Grant touched on this earlier about supply chain resilience and the importance of self-reliance and Australian industry capability. And Downer is well positioned for that given our sovereign ownership. There is no doubt there's large opportunities for Downer probably in the asset services space, the facilities maintenance space, as there is in our above-the-line professional services consulting space, which I'm going to touch on in a minute. And just on the 5th dot point there, I will talk about this a little more later, but just a first pass sort of deep dive estimate, our current turnover is in the region of 700 million, and within the next 4 to 5 years, against the background of those big spends and getting quite targeted on where we can actually play and compete, we can grow that to 1.5 billion with what we currently have. So a great opportunity sits in front of us. I'll just move to the next slide. So I thought what I'll do is just spend a couple of minutes just talking about the defence customer landscape. Really, defence you can think of as those 4 pillars there, and again, apologies for the acronyms, but if we're just starting on the left there, the ENIG, which is Estate and Infrastructure Group, looks after all things estate facilities within defence. And as you can see there, we are involved in what's called the above-the-line space, and I'll touch on that in a minute, and then also the below-the-line space, which is the facilities maintenance bit, and then the estate development projects, which you heard Mark talk about a little bit earlier. Now, I'm going to touch mostly on above the line in this presentation, and Peter Tompkins, who's up next, will really touch on the below-the-line piece. But there's great growth opportunities in both of those areas. So that's ENIG. Where the lion's share of that money has been spent is actually through CASG. So that's Capability Acquisition and Sustainment Group. So put simply, that's all things that go bang, and that's about defence capability. That's really the warfighter. And you can think of that in 2 parts. You've got the build, and then you've got the sustain part. Currently, there's talk of spending 270 billion in that space alone in terms of acquisition over the next 10 years. And that is predominantly made up in the maritime sector. Circa 66% of that is in the maritime sector. A large proportion in Air Force, and then some in the land domain. CIOG, that's the Chief Information Officer Group. So that's all about information platforms and how ships talk to ships, how ships talk to land, and then also the joint warfighter, or joint command as it's called, how Navy, Army, Air Force and others all talk to each other. And you'll be maybe surprised to hear that actually doesn't work seamlessly at the moment. A ship can't talk to a ship out there. They have to talk back to base in Australia and then relay the messages back out to another ship. So there's a program that we're involved with called C2273, Maritime Project, where we are working on integrating those platforms. And then the ultimate user of all this is really the service arm. So that's the block on the right-hand side there. And that is your Army, Navy, Air Force, plus others like the Australian Signals Directorate, which is all the intelligence part. And then you've also got other bits in there. There's some space programs that we're involved in that sector, et cetera, et cetera. So those are really the 5, I guess, defence customers. Just touching on the above-the-line space. So the total spend in that space at the moment is about $2.2 billion. And we take about 250 million of that. So it's around about 12.5% market share. The main parts of that is in CASG and CIOG and in the service arms direct, actually. In CASG, the main delivery vehicle is through an arrangement called the MSP, which is a major service provider, and we're one of 4 major service providers, which is really a above-the-line defence prime. And there's 3 other primes as well in that space. Now, this was formed about 3 years ago, and this has been a key part of us being able to grow our business. So just about sort of where we've come from, Downer bought Aegis 4 years ago, which was a small niche SMEs, small medium enterprise, and then got later followed, and that business turned about 18 million, if my memory serves me correctly, and then bought another business called Invista about a year or 2 later, and has grown the business from around about 18 million up to the current day 250 million over the last 4 years, which is a pretty impressive growth path. And as we look forward, as I'll show as I go through this, that growth can continue against those big spend numbers that have been put out there. So a little bit about our services, and I'll just touch on a few things here, and I'm just going to touch on the strategy and planning bit. So we're quite active in program and project management. As you can imagine, this is a lot of money that Defence has to spend, and they need assistance from industry to help them, I guess, strategically work out exactly where they spend that money, what acquisitions they're going to, in terms of capability, where they're going to invest, what that needs to look like, how they hold the supplier or the vendor or the prime honest, and how they run all their quality assurance programs around that. So we've got a number of people in all of those domains operating in that environment. We've also got a large contingent of systems engineers. So this is about those communications platforms, enabling weapon systems to be able to communicate with each other, upgrades in that sector, and then also just really the flow of information, because warfare is, I guess, a large proportion of that is all about knowing what's going on. And that's a continuously evolving space. And then cyber security is the other one. We've got a fairly big contingent of high-grade defence secure people that are deployed into the Signals Directorate and into CIOG that does work that I don't know about, and nor should I. And you only know about those things if you have the right security clearance. So we are involved in right at the pointy end in terms of what really matters out there. I think, just to sort of summarise it, there's really 4 parts of our business that sort of play to the defence sector. So we've got the above-the-line professional services piece, we've got the estate development, we've got the facilities maintenance, which Peter's going to talk about in a minute, and then we've also got this opportunity in through-life support where we can possibly look at leveraging some of Pat's asset services business and use that in the defence sector, given the sovereign ownership of our business and the government's strong desire to grow and develop Australian industry capability. So just to sort of represent that, the bar on the left really gives you a breakup of how our total defence business is comprised of at the moment. So that's the 700 million today. And as I said earlier, based on the detailed deep dive that we've done with some experts that know the space, so it's not just our numbers, it's been looked at by others who know the space, we believe we can get that to 1.5 billion reasonably easily within the next 4 to 5 years by growing the facilities maintenance piece, the estate piece, and then also the professional services piece. And then starting to look at how we can transfer the asset services capability into the defence space. I've been around Canberra talking about those things to all the defence leaders, or many of them, and I can tell you there's a lot of interest on the part of the customer in terms of what Downer can bring. Downer's a relatively unknown quantity in defence, and when you go and have conversations with people that are sort of right at the top of the service lines, Chief of the Air Force, Chief of the Army, and then people that have been in leadership positions there before, like Sir Angus Houston, who I've had the pleasure of meeting, and you talk about Downer, a lot of these people have got no idea on what Downer actually does, its sovereign ownership, and really what it could be doing for defence. So I think the message I'm sending you is that we've got all the makings of doing something really great here. Just to talk a little bit about the above the line space. So above the line really refers to where we are I guess a trusted partner of the defence client. And most of our contracts are based on time and materials where we deploy experts into the customer's project offices, and they work side by side with the Commonwealth teams on what is quite a nice low risk contractual arrangement. And we become trusted advisors, and our people really become part of their teams. So as that slide indicates, and what I've called out before, strategy and planning, the systems engineering piece is pretty important there, and everything around information systems development and the security that goes around that is what we do. Our above the line business at the moment is around about 50-50 between the MSP and just straight through to defence through defence panel work, and we're looking to grow both of those as we go forward. I think the key thing I just want to sort of call out here is that it's almost a new era in defence. And what I mean by that is there's a real need for integrated systems to enable platforms, be it a ship, a plane, an army vehicle or something else, to reach its full potential. So it's about the systems that allow them to communicate with each other. That's what really going forward is all about. There's also a need to upgrade facilities. Big spend in defence estate infrastructure to be able to house and operate these new platforms. And then large sums of money. In fact, the lion's share of that 575 billion that I called out in the beginning is in sustainment, and in particular in maritime sustainment. So there's great opportunities there in terms of making sure that we can help defence maintain their systems so they can get the complete life cycle benefit out of them. And up to now, within defence, when you go and talk to some of the defence leaders, that's not all been as organised as you might think it would be in a military organisation. And you hear stories that, there's instances where some of the equipment doesn't necessarily work when it needs to work, and there's a recognition that that's got to be re-looked at, and a lot of money being lined up to be spent on that, which is currently being kicked into gear. I think the real good thing for us here, though, is that we're talking about integrating very complex systems here. And in the main, that integration cannot be done by the Commonwealth teams. It really requires a level of skill and practical implementation experience, of which Downer's got quite a bit of, to be able to help Defence implement these new information systems against the background of security. And that's really the big opportunity that sits in front of us. Last slide. I'll just touch on the MSP, so that's that last point there. So the MSP was put together by Defence around about 2.5 years ago, and that came into being because prior to that, there's lots of SMEs out there that we're all contracting with Defence, quite an expensive way for Defence to get things done. Small businesses, single shingles or single person contractors as we call them, operating with Defence, not necessarily delivering all the best outcomes and very expensive to administer and to manage. So Defence then formed these 4 MSPs. We are one. There's an alliance between KBR and EY is the other one. Jacobs is the third one. And then Nova and Kinetic are the fourth one. So 80% of all the CASG work goes through those MSPs, and we obviously get our portion of that. A key driver for that is really developing the SME. So it's not about just feeding the big guy. It's about developing Australian industry capability. And so we've done a pretty good job at developing SMEs. And in fact, of our total population, which is around about 350 people working through the MSP, 60% of that is actually SMEs that we've brought in, many of which we've actually grown from circa 5 people up to 30, 40, 50 people. So a really good story in terms of developing Australian industry capability. I think I'll stop there. I see Michael's looking at his watch, and I'll hand over to the next person. Thank you.
But we do have time for a bit of Q&A. We've allowed time for Q&A at the end, but we will, given these guys have just presented, let's allow for some Q&A on these specific presentations, which obviously covered a pretty broad area. So has anybody got any questions to ask Trevor, Pat and Andrew? Elise?
Thank you. I was interested on Defence. One of the things you mentioned was that the 700 mil rev could grow to 1.5 within your current capability. What about outside your current capability? Do you have any ambition or intention to extend outside that? If so, what would that look like? And if not, why? Why would you prefer to stick, I guess, within your current capability set?
So maybe I'll just give some context to my answer. So I guess when I say we can grow that business to 1.5, I'm saying that we can do it with what we've largely got, but we have work to do to get there. The big one is we've got to go and build relationships with federal government, with all the key decision makers within Defence. Because back to my original story, is not everywhere, but in most spaces, Downer is relatively unknown. And so the view is, again, our view plus these experts that we've used to help us build our strategy here, is that by getting on the right panels, a targeted branding and communications and relationship building program, we can line ourselves up for a whole bunch more work than what we're currently looking at. There's work going out there that we just don't even look at because we've had focus on other areas. So that's one. In terms of looking at capability, which we may have to grow, and Grant sort of alluded to that, I saw in his first slide about an acquisition may be needed, would really be probably in Pat's space, in the through-life support space, to really take advantage of that. So that's a strategic decision that would have to be made against the background of some large revenue streams that could be on offer for the next 20, 30 years. So that's a decision that's got to be looked at. Have I answered your question properly? Thank you.
Anyone else? Scott.
Thank you. If it's going, my question's for Trevor, and it's hopefully relatively easy. On the telco side of your business, you mentioned the 3 major customers, NBN, Telstra, Optus. 2 of which are looking at the potential to outsource a lot of their infrastructure. So how do you think about your business if your customers thinking of selling? Is that more of an opportunity, or is it a risk, and how do you manage that, please?
Yeah, we're already in discussions with potential buyers of some of that infrastructure. It would come down to who purchased it, because if you take, there's been some comms out there in the press that Optus and Telstra potentially are looking to sell their cell sites. So we're already in the space of actually developing those cell sites, upgrading those cell sites from 4G to 5G, etc. So, and we're in discussions with some potential superannuation funds, asset owners, in relation to how they would then have a partner to help maintain those infrastructures and continue to develop that infrastructure depending on what the purchase agreement would be. So if we were to be able to secure something like that, that's only going to enhance our telco business.
If there's no more, then there will, as I said, there's going to be opportunities to ask questions at the end or over lunch. Anyone else out there? No? So thank you guys. Thanks very much.